Investors reacting positively to the news from you this morning in terms of governance and the strategic review. I want to ask you about the Sabic stake, though. Do you have 100% certainty that Sabic won't make a full takeover of Clariant?
Good morning to you. Thanks for having me on your program. I think what we can not talk, obviously, in the name of Sabic, but Sabic today has released a statement that they do not intend to make a takeover. So that's how we take it, and that's our understanding, absolutely, that Sabic has a long-term investment and shareholder view on the company and intends to have a value as being a shareholder of the group, like other family shareholders we do have as well.
You've agreed to sell non-core parts of the plastics and coatings division. Can you give us a timeline on how you're going to approach this?
Yeah, I think the clear portfolio upgrade we announced today allows, on the one hand, to create value by creating a new high-performance area, and on the other as well, to divest the remaining pieces, more mature businesses, which are leaders in the area, but do not form part of the portfolio anymore. We will start the process now of doing a carve-out and divesting those businesses. We expect this to be completed by 2020.
Speaking of some of your targets and what you expect to do, lifting the margin guidance to 20% is seen as ambitious by some analysts that have been commenting on what you've been saying this morning. How do you expect to get to that margin guidance of 20%?
Well, it is really a threefold improvement. On the one hand, our current businesses, which form the core of the company, are improving their performance based on innovation. And then we refer to what we just discussed. On the one hand, creating a new high-performance polymer business with a very high performance, which is going to go from 3 billion sales to 4 billion sales in 3 years' time and increase its profitability to 25%, leveraging on synergies and on the unique properties of those plastic materials that we are combining. And on the other hand, we obviously are divesting lower margin pieces, which also helps the group to improve its margin average. So it is a combined move which really reflects an upgrade in terms of quality of portfolio and quality of earnings for the group as well.
Patrick, in terms of getting to the ideal size of $15 billion in sales and the options on the table for that, does it include more M&A?
Well, I think we will have first a lot of work to do to make today's announced change reality in the next quarters and year. That is the main priority. But obviously, if you look longer term, we will clearly look at other growth options, also external growth, if it makes sense. It's all about creating value. It's not only about size. It's about creating value for all shareholders, like this move we announced today actually means. And if there are other opportunities in the future, we will not say no, but we will not guide for either today. Today, we have a clear program for the next 2 years.
Okay, so clarity at Clariant, Patrick, but in the past 24 hours, we've also had an escalation in the trade war between the US and China. Does this put your business at risk in any way?
Well, I think we are in the lucky position that we do have regionalized productions, and therefore we mainly serve regional markets out of regional production as well, which makes us less dependent on the barriers and the trades themes which are now being imposed here and there in the world. I think we actually do aim to produce most of the products we sell in the region in that same region, which doesn't make us immune, but at least reduces significantly the impact of such barriers.